Good morning, everyone. Mike and Corey here today with three exciting to us topics, maybe not exciting to everyone, but you know, PPI or inflation updates, little follow-up from yesterday. Another ego stock announcement, Bumble, you may have heard of it, maybe not. You're going to learn about a little bit about today. And then Reddit came out with earnings yesterday. So, and Corey will talk about that and some of the things that affect their earnings, maybe outside of their control. So, before we get started, must remind you this is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So I'll go through the first and probably the least exciting part is PPI wholesale price inflation information came out today. Um, Rose 0.4%. You're like, what does that mean exactly? It's a little bit more than expected. I think they were expecting 0.3, so a little bit higher. But the actual, when you take out food and energy, the core PPI was in line with forecast. So that's kind of good news. That's kind of what they're expecting. I know the headline says they missed, but the core PPI was expected. It still says the same thing. The inflation rate's a little bit higher than the Fed would like. They want a 2% long-term goal, and it's running more like 3, but 3 is a lot better than 9, in my opinion. It certainly is, in everybody's opinion. But yesterday, when the inflation numbers came out, the market sold off, but then it came back. So, and then today, I think last time I looked, the market was up. I'll take a look again in a few minutes. So, overall, I think the market's handling this pretty well. What does this mean for you, or what does this mean that we're going to hear? The chances of the Fed rate cuts, it says this article, it dims. There eventually will be Fed rate cuts. So they're coming someday, but it just means they're not coming as soon as expected. And, yesterday, before yesterday's report, I was hearing September. Now I'm hearing maybe not at all this year, maybe December. You know, Here's the thing. The Fed cuts rates to stimulate the economy. If the economy's doing well, which it is, then it doesn't need to be stimulated all the more. So, I mean, that's a part of it. What does this mean to big companies? Big companies don't need to borrow quite as much. In fact, they have a lot of positive cash flow. So to them, it's not as big a deal. Where it's really a big deal is to smaller companies because they do need to borrow money to run their businesses. So anyways, that's all I'm going to spend on that today. I really want to get into a more exciting topic, which is our next ego stock release. I know we've talked about things anywhere from Rocket Labs to Elf Beauty. Corey and mine, not our expertise, but we believe there's a good market and opportunity there. And then this next topic here, I'm gonna bring up the site. Wow, look at this. We got sex appeal on the Ankerstar Wealth show. Like we got romance showing on the screen is Bumble. And while some people may say, I'm already married, like me, like Corey, we're off the market. We're not active Bumble users. Our wives are very thankful for that. And I hope they're not either active
Hold
user.
on. Hey, you got to specify we're off of that market, but we're on the stock market. That's
Yes,
for
we're
sure.
on the stock market. We're off the dating market. And I kind of like thought back to myself, you know, dating, years ago, the way dating worked, back when I was in school, you sent a note and your, person would send another note. You actually had to have handwriting and write in English and things like that. Penmanship seemed like it was important. People could read your note. Today's generation, that's all gone. I mean, you've got texting and AI and sending emojis and all this stuff. It's easier now. Maybe I'm just making that up, but it seems like it'd be easier now. So, anyways, Bumble is a website, or it is a dating application, and I'm going to explain the key to it in a minute. But it was so when you think of dating websites, not that I'm an expert, although I've listened to some podcasts called Business Wars and have covered these. You have an eHarmony, which was written years ago about trying to find the right marriage, and you fill out a lot of questions. And then you have a Tinder, which is maybe a quick like, hey, let's meet up tonight. Certainly not on that. That's kind of a range, but a lot of these things are driven by men. I'll just be honest. A lot of these websites are, there's 10 times as many men on there as there are women. I mean, lots.
Is that right?
Yeah, yeah. So if you're like
Oh,
trying to find someone, if you're a guy, you're competing with a lot of other guys for the same woman. I mean, it is like, yeah, it's hard. But the cool thing about Bumble, the thing that I like about it, that and I listened, and I'm going to talk about the CEO in a minute, um, is it's driven by women. Women make the first move. Women make the next move. So if you're a woman, you're looking to date, and I read where still men outnumber women 3-1 on this website. Um, you know, but at least women make the first move. So, I have not tried it. I have not tested. I did not meet my wife on Bumble or meet anybody there. But when we're thinking the future, things that we want to invest in, you know, the days of, maybe your friends set you up with someone or you meet someone at the library or Starbucks, maybe that still happens, but it happens a lot less. A lot more stuff is online. Okay, so what's a catalyst? Because I'm going to show you the stock price. Actually, I'll jump to the stock price real quick. This is a 1 year, this is a 5-year graph. So you go back to the COVID days. Wow, this is a great idea. Online dating, everybody had to stay at home. So the stock trades around 70. That's when it came out. Good time for an IPO. And you can see that, oh boy, that looks like a horrible investment. If you bought it back in 70, and it's down to $8 a share, like it's lost 80% of its value. So what causes this? Change to more normal times. But what's the catalyst? Why do I think this stock is going to take off? Their CEO and founder is returning. She left. She went on to other things. I've seen some of her master classes. She's a really good leader. Her name's Whitney Wolfe Herd. She came out of I can't remember if she came out of Match or she came off of a site to create this company, and she left for a while, turned it over to someone else. That person is resigning, and Whitney Wolfe Herd's taking over in March, so mid-March. So that's next month. That's why we believe there's an opportunity here. It's a turnaround story. It's not the number one leading dating site. It's actually number 2 or number 3, depending on where you look. One thing I thought would be kind of fun to see. Let me see if this will work. Okay. It might have timed me out, but I found a website. Well, it timed me out. Okay. So it was how couples meet. And, back in the early 90s, before online dating, there was lots of ways through friends, but online dating has taken up 40% of the market share of that's how you meet spouses, or that's how you meet people, is online. So it's new. And if you dated and found your spouse or whatever before 1990, you're like, online date, what? That seems crazy. It's just the way it is nowadays. So we're trying to take advantage of that. Oh yeah, here's some stats for you. Bumble, and this feeds into what Corey said yesterday with having like a large user base. Right now they have 50, or in 2023 listed here, 50 million active users. 2.3 are paid. So that's only 4.6%. This data is a little bit old, but I mean, it's, it just shows you that there is a chance to monetize it. I don't use the website, so I don't really know, but I imagine they charge the men. The women are probably free. I'm just guessing, but I don't know. Market share in 2023, they had 26%, and it says it's the second largest dating app behind Tinder. I've seen other ones that say it's third behind Tinder and eHarmony. So this is our 4th ego stock that we're bringing up. Believe there's a turnaround story here. believe this. Certainly, I don't know that it's going to go hit $70 a share like COVID times, but certainly a chance to double or triple in the next year. So Corey, I guess I'm just going to say, how did you meet your spouse? I used Meta, although I met her before when I was in high school, but I used Meta or Messenger. Corey, how'd you meet your spouse? I'm just going to ask it. Personal information.
We're pulling up on Valentine's Day.
Oh,
Those feelings are coming back, Mike. But we were at work, and I was the new person at work, and I was asking a bunch of questions, trying to be a successful employee. And then I noticed one day my wife and I were not talking about work anymore. And I was thinking, whoa, wait a minute, what's going on here? So yeah, it started as a friendship and just kind of built from there. So no apps.
No apps. So Corey's a little younger than me. He was in a generation that could have went the other way with the online dating, and he chose not to. Good for Corey. There's a lot of people out there that are using the online apps, and there's nothing wrong with it. I was actually thinking about this morning as I was driving somewhere, and I was thinking, the problem with not using, say, an app, you're looking at a very small, group of people. There's only so many people you could meet in a day, face to face, work with, things like that. When you use an app, you're really sending a wide net. You're casting a wide net. I'm sure you can specify by location, but theoretically, you could meet someone from any location. And if you find that if you have an algorithm that matches you up correctly, hey, you can meet the perfect person for you, even though they're 1,000 miles away. There's.
Hey, Mike, one thing that really stood out to me about your kind of pitch and presentation there was the returning founder. And I was kind of going through, what are some other founders who returned to struggling companies that were theirs and turned it around? I know, would Steve Jobs fit in that category?
Absolutely. He first one that came to my mind as soon as you said it, Steve Jobs.
And I was trying to figure this one out. I know Howard Schultz did something a little bit similar with Starbucks. I don't know if he was the original founder. However, he was the guy who turned it into Starbucks.
Yeah, he was. It was created out in Seattle. He was an investment banker, I believe, and saw what they were doing and got involved. Just like McDonald's was started by the McDonald's brothers, but Ray Kroc is really the one that launched it. So, I just think there's a catalyst there. We'll see where it goes with Whitney Wolf Herd returning, and and I just think it's the future. Whether we like it or not.
Look around the market. What do we see from these successful founders, or what companies do we know that have been successful because they are led by their founder, who has the purest and most ambitious vision for those companies? You've got Meta, you've got Nvidia, you've got Palantir, you've got, you could go on and on. I'm trying to.
Yeah, well,
there's a lot of them.
Newer successful company, but sometimes it takes years. Like Nvidia, you read about Jensen Huang. It took years before we see what we see now.
Yeah, absolutely. So. But those founder-led companies, there's really something to be said there. You could throw an Amazon into that. If Bezos is still around, not quite to the extent he was, but that's something that we look for in a company. Who would care more about a company than the original founder and the success, right? So
Correct.
There's a different level of care there. All right, going over, and I don't know if Reddit is founder-led or not, but they did announce earnings today.
I know they IPO'd recently, and they've done well since the IPO, but obviously give us the news.
I'm going to talk about that. So originally shares fell about 15%. The shares have come back. They're I mean, they are coming back quickly now, only down 3.8% now. So the shares are coming back quickly. And I'll explain kind of why that is and why Reddit is a little bit harder to value than some other companies. You think about what would be one of the most basic companies to value. And even this one had some volatility, but Coca-Cola, right? It's just a very predictable, mature business. And even they had a unexpected earnings report that sent the stock quite a bit higher this past week. But some key points and we'll talk about why Reddit is a little harder to value. So key points, okay, the stock reaction. Global daily active users rose 39%. That's good, but only to about 102 million. Wall Street was looking for 103 million. So that's kind of one important part of the story. Just yesterday on our morning show, we were talking about these companies, these network effect companies. And the number we used from Josh Brown there, where he thought they're kind of have reached, terminal velocity in a sense where they are going into orbit and they are unstoppable. He thought was 500 million users. So Reddit's still a bit away from that. I do want to read through just really quick. This is the actual Reddit earnings release. This stood out to me. Well, I mean, of course, daily active users, 39% growth. That is impressive. Very. Fourth quarter revenue, 71% growth. Wow. Gross margin, 92.6%. Wow. You talk about a capital light business. I mean, unbelievable. Wow. I just wanted to hit on this. So going to those network effects, looking at these users, and I want to see, Mike, is there anything that surprises you? So international was up 46% year over year. So that's 36 million to 54 million, or 37 to 54 million daily active users. And those are daily users. And the US, 36 to 48 million daily active users. And of course, altogether, 73 to 102 million daily active users, 39% growth. Mike, what do you think? Is that about what you would have expected, or?
Well, I definitely like to see the international growth there, because guess what? The United States only has so many people, and it's growing small, a little, but international, there's billions of people out there. So there's lots of market share to be gained in that international. So the faster that continues on, the better. It's called the global economy. As far as the actual user growth and the profit margin, wow, that's
I
like
know.
that's like printing money. It's like that's why I always thought Starbucks was, pay $6 for a drink. I'm like, that costs like 20 cents to make. But anyways,
Starbucks is printing money, but not quite like Reddit. Not
exactly.
quite like Reddit. Starbucks, they say, is like a toll booth. It's like, okay, pass go, you got to pay your
Well,
money or whatever.
just so you
Um,
know, I took my daughter and paid the toll today. So, anyways.
ah, Hey, really quick on Reddit. So one of the things that's a bit perplexing on the investor side is that Reddit's pure advertising revenue and business revenue isn't really the most attractive part of the business. What's really most attractive is their data. And if you've listened to the morning show for a long time, you've heard Steve say data is the new gold, and it's true. It's a great line. And it's most true for Reddit, almost of any company out there. And the reason is Reddit has these niche topics, um, and of course, mainstream topics that get debated and discussed with really highly intelligent users. And they've been doing this for a long time. So many of these language models that we see have used and licensed data from Reddit, which was a kind of, it was, it was a bit of a hot button topic when it first happened, because the Reddit users were like, wait, I didn't get paid for submitting all this data, but so be it,
Yeah.
I guess. So, Reddit is licensing out that data to train these models, and that's really the most valuable part of the business. So it's something very interesting to watch, and it might be one to buy, if opportunity presents itself.
Yeah, yeah, definitely. And now I heard one of the reasons why they sold off and the earnings went, or there was concerns on the earnings, had to do with Google feeds, where Google, you make a Google search and it would send you to Reddit. And guess what? Google can update their algorithms and send less people to Reddit, or, so that's where a Google has an influence on Reddit outside of Reddit's control. So anyways, that's one of the dangers, I would say, when you're like, why in the world wouldn't I invest in this company? It's so easy. Well, it's not quite that easy. Plus, you always have to look at, how things are valued. So good stuff. Maybe we should have went to Reddit and be like, this is how we come up with Valentine's ideas.
How
Tomorrow's
on
isn't it tomorrow's Valentine's Day? Maybe it'll be the Mike and Corey Valentine's special. If you waited this long and you're hearing this, you're probably in trouble. It's going to cost you more for sure. But with that, we'll sign off and have a great rest of the day. Bye.